So about 2.5 weeks ago, I told you guys that if ticker symbol AAPL, Apple, could not get back above 257, then look for a pullback down to 249. And if 249 failed to hold that support, then look for a further pullback down to 243. Take a listen. So looking at the current chart, what we see happening right now is a breakdown of this bear flag. If the stock cannot get above 257, then I want you guys to look for a 1% continuation down to 249. And if 249 failed to hold that support, then look for a further pullback down to 243. Now at 144, I told you guys that I was bearish on ticker symbol HOOD, Robinhood, and that I was looking for a pullback down to 124. Take a listen. Next, we have Robinhood, ticker symbol HOOD. So overall, I am quite bearish on Robinhood stock, and I'm looking for a pullback down to 124 and then a pullback down to 107. So from where I made that prediction, Robinhood stock did end up falling over 13% and was only a couple cents off from hitting my price target at 124. And with that said, my next price target to the downside for Robinhood is going to be at 107. Now let's jump over and take a look at the S&P 500. So about 2 days ago, I told you guys about this head and shoulders pattern, and I mentioned that it was quite obvious and that you guys should not be surprised if the market invalidates it with a move back to all-time highs, which by the way is what we're currently seeing. So now that we've moved on from a head and shoulders pattern, the S&P 500 is now forming a double top, which is also bearish, and a break below 652 could set up a move for the S&P 500 all the way back down to 631. With that said, if we do end up taking out this high right here at 674, then look for a run to 683 and then a run to 692. Now today, Morgan Stanley's CIO says that the Fed needs to cut rates in a more meaningful way. And by meaningful way, I believe he's talking about jumbo cuts. Take a listen.
Joining us right now is Mike Wilson. He is the CIO and Chief U.S. Equity Strategist at Morgan Stanley. And Mike, there have been so many questions about what's happening in the market. Volatility has definitely stepped up, but you've been of this long-term view that we're in pretty good times for quite a while to come. You're still feeling that?
Yeah, I think our differentiated view is what we've talked about, I think the last time I was on the show, is that we believe that we were in a rolling recession for the last 2 or 3 years. The private economy has been quite weak. Yeah. I think the Treasury Secretary sort of said the same thing. And now we're in a rolling recovery. The recession itself ended with the Doge layoffs. And if we look at the data closely, and we've documented this, it shows very clearly that there was a spike in layoffs, and there was a low in all the jobs creation, which the revisions now are proving. And the stock market figured this out. The stock market is smarter than all of us, and the confirmation for us is that the earnings revisions now have really exploded higher in a way they only do in a new economic cycle.
That's what I think is so interesting. David Solomon was here just a little bit ago, and he called this late cycle. You think we're still early cycle?
Well, I think we just transitioned. Yeah. Now, where I think I also differ, have been differing, is that the cycles aren't going to last that long. Right, we're now in an inflationary regime. It's very different than all of our careers where inflation was coming down. And what that means is that these cycles can't be elongated the way that they were because the Fed has to respond ultimately to higher inflation. Think about the last 5 years. 2 years on, 2020, 2021, 1 year off, had a nice recovery in 23, 24. Then we had another kind of capitulation recession in this year, and now we're into a new 2-year cycle. So you just got to keep that in the back of your mind.
But that's not that different than what he was saying then. What David Solomon was saying, we're late cycle, this could have another year or two to run.
That's right, but I think that context is important to distinguish, because if it's late cycle, then you only want to own sort of defensive, high quality names. In an early cycle, new recovery, the market will expand, it will broaden out, and that's kind of what's starting to happen now. We think that's the story for 26. It looks a lot like 21 in that regard.
What do you like?
Well, we like a barbell at the moment because we still think the Fed needs to cut rates. So we've been on the cyclical side. We have liked a lot of the tech sector. We have liked financials. We have liked industrials. That's the pro side on the cyclical side. And on the defensive high quality side, it's basically healthcare right now. We think healthcare looks quite interesting. Now we do think the Fed will get with the program and they will start cutting rates in a more meaningful way once the labor data confirms what we all know, which is that the labor market's not that good. And when that happens, then we can really transition to the interest rate sensitive parts of the market that have been languishing, things like housing, things like consumer goods, all the durable goods, the areas where there's pent up demand.
How difficult is it to not have government data at this point? Yeah, because you sound so sure in your beliefs on these things.
Well, I think the government data that we're waiting for, everybody's waiting for, is mostly the jobs data, but that's backward looking. I think we've already confirmed that the trough was in April. That doesn't mean, by the way, we're totally out of the woods. But what it means is that I don't think we're going to learn a whole lot from this data that we're not seeing at the moment. I think it gives comfort. I think it will give the Fed the cover to do what I think they need to do, which is cut rates in a more meaningful way. So that's, to me, that's the risk, is that we don't get the data that allows the Fed to cut more meaningfully.
And when you say more meaningfully, you're talking about more than 25 basis points at a clip?
Exactly.
Now, going into the rest of the video, here's some important levels to watch on ticker symbol CRWD, CrowdStrike, Bitcoin, ticker symbol BTC, and ticker symbol AMD, Advanced Micro Devices. Let's go ahead and begin with CrowdStrike, ticker symbol CRWD. So currently the stock is running into resistance at 507. If buyers cannot push the stock above 507, then I want you guys to look for a 2% pullback down to 490. If 490 breaks, then look for a pullback to 472. And if 472 failed to hold that support, then look for a further pullback down to 455. And from current price, we are looking at a decline of over 9%. Now to the upside, as long as CrowdStrike can get and stay above 507, then I want you guys to look for a 5% run to my price target at 531. Next, let's go ahead and take a look at AMD, Advanced Micro Devices. So currently AMD is inside of a bearish rising wedge pattern and is currently running into resistance at 239. If buyers cannot push the stock above 239, then I want you guys to look for a 9% pullback down to 214. And if 214 failed to hold that support, then look for a pullback down to $200 per share. If that level breaks, then we're looking at a further pullback down to 184. And from current price, we are looking at a decline of over 22%. Now to the upside, if AMD can get and stay above 239, then I want you guys to look for a 4% run to 248. And if the stock can get above 248, then look for a run to 258, which from current price would be a return of over 8%. Next is Bitcoin, ticker symbol BTC. So the first thing that I want to point out to you guys is that Bitcoin had a breakdown out of a bullish pattern. Now, usually when that happens, you'll get a retracement back to this point, or this point. With that said, here's example 1 and here's example 2. Now, Bitcoin's main level of support is going to be at 109. If buyers cannot keep the price above 109, then I want you guys to look for a 3% pullback down to 106. And if 106 gets broken, then look for a pullback down to 104. Now to the upside, as long as Bitcoin can stay above 109, then I want you guys to look for a break above 113 and then a run to my price target at 118. And from current price, we are looking at a return of over 7%. Alright guys, if you liked today's video, go ahead and leave a thumbs up. And if you're currently watching and you're not yet subscribed, do consider subscribing. As always, thanks for watching, and I'll see you guys in the next one.